Good morning, investor and corporate. Welcome to SET Digital Roadshow Year-End 2022 Performance Review. This section will run about 45 minutes, including Q&A. Company will start the section by 30 minutes presentation, followed by 15-minute Q&A section. And during Q&A, investors may review questions in the meeting room chat box or use raise your hand function. We will open your microphone so you can ask the questions to the company directly. So may I now invite PTT Global Chemical Public Company Limited to start the presentation, please. Thank you very much.
Thank you. So thank you everyone for joining this presentation today. So for today's meeting, we'll be going through the recap of last year's result and update on our strategic direction, market outlook, and also on our implementation effort on ESG. So for the first section, we'll be going through on the last year result. So for last year, maybe we can see that for the external factor that impacted on the chemical sector, we have external factor coming in from the broader economic effect on the recession, and also the China, which they still maintain zero COVID policy. And also they had impact from the Russia and Ukraine tension that occurred in the first quarter, which are resulted to the fluctuation in both the oil price and also the refined products spread, and also the petrochemical spread as well. And this is also in the backdrop of the overall picture where there are still new capacity that came to the petrochemical market as well. So overall, that resulted to the adjusted EBITDA for the company to came in at around 39 billion Thai baht, which actually only declined by 30% from the previous year. This mainly, as I mentioned, that we still get the support from the high refinery margin, whereas the petrochemical spread, most of the product declined from the previous year. The other key factor that we had for us last year was that we had the scheduled shutdown of the ethane cracker in the second quarter, and also our refinery also shut down in the fourth quarter. So that also impacted to the lower sales volume as well. But beside all these, we also like to point out that last year was the first year that we started to recognize the full year contribution from our next, which is the company that operate in the industrial coating resin, which we acquired at the end of 2021. So we're always glad to report that it was able to full year contribution last year, and the result came in not that far off from our expectation, which we will go into more details in the later pages. Overall, the bottom line, we reported the net loss of about 8.7 billion Thai baht. This mainly resulting from the several one-time items that we had to recognize during the year. The main one is the hedging loss that we had of about loss of about 23 billion Thai baht. This mainly because we hedge on the crack spread of the refinery product. And as you know that last year was the year where the refinery product, the crack spread went up really high at the highest level that we've seen for many years. So diesel spread went up to $60 or $70 per barrel at the highest. So that resulted to the hedging loss that we recognized during the year. But going forward for this year, for the hedging policy, we adjusted some of our policy in order to make the hedging to be more on the shorter term horizon, given the dynamic pace of the market. So for this year, we did not expect to have that magnitude of the hedging loss occurring in this year. So just to look at the accomplishment that we completed last year. So even though there were several challenging factors, overall we still try to maintain our long-term strategy and also accomplish several things in order to make our business more resilient and more efficient from the external factor. So the first item on the left, you will see that we continue to progress on our long-term strategy, which the main one being our aim to increase our contribution from what we call performance chemical, that we try to grow up to 35% contribution by the year 2030. Last year, we had about 22% contribution from performance chemical, mainly coming from our next. So last year, our next delivered EBITDA around 320 million euro, which is slightly less than our original expectation, which was at around 360 to 380 million euro. So we will see that for our next, the main factor that resulted to the EBITDA of our next is because of the lower sales volume, which was mainly impacted by the overall economic slowdown. But if you look at the margin per unit of our next, it was still able to maintain at the same level because it was able to pass through the increase in the cost into the selling price to the customer. For the second item, you see we have the enhanced business portfolio, which we try to manage our portfolio to be focused on our core business, which is to grow in the performance chemical. So in some of the other non-core, like for example, we have the company called Thailand Terminal or PTT, which operate in the gas transportation pipeline in the Mataput area. So we have Gulf Energy that came in and joined as a new partner in the company in last year. And besides that, we also implemented some restructuring of our subsidiary by transferring the entire business of some of the company that we hold 100% into GC, the parent company, so that we can reduce some of the operating costs at those subsidiary levels. So overall, we expect to save some OPEX of around 200 million baht per year from this exercise. The next one, we still continue to get ready for some of the new capacity that we'll have to start operate last year and also this year going forward. So we have the company that we increase our share in, which is ABT or ATC Vinitai, which they operate in the PVC business. So we were ready to have some more exposure on that. And besides that, we also have the company called Envigo, which is the recycled plastic plant that they started to operate commercially at the end of last year as well. And lastly, just to point out on the financial flexibility, which we continue to manage our capital structure. The main exercise that we completed last year was that we were able to secure the long-term funding to support our capital structure. So our funding that we had for the acquisition of Amnex at the end of 2021, which we mainly secured from the short-term bridge funding from both the bank and from our parent company PTT. We financed that into the long-term funding through the bond issuance of over 100 billion Thai baht. So we were able to secure that and secure our to ensure that we have the payment profile that match with our operating cash flow. Next, just to highlight on the outlook that we have for this year. So the key factor that has impacted to the market since the beginning of the year, obviously, is the reopening of China, and we continue to monitor on the progress of that. So the key impact that it has had is on the changing of the sentiment in the market, which they're able to have more positive outlook on the increase in the demand coming from China. But they still remain to be cautious and wait and see how the real fundamental coming from China will gradually improve or not for the rest of this year. So that's why we still try to remain cautious and we will that this improvement will be more in the gradual mode. And we probably will see more substantial recovery from the second quarter onward. However, if you look at all the end-use market outlook, we think that in the long term, for this year and next year, the fundamentals should improve. For example, if you look at the automotive sector, the overall industry should improve, especially with the easing of the chip shortage supply situation that has plagued the automotive sector for the past 2 to 3 years. So for this year, that the easing of that situation should help to improve the automotive sector as a whole. For textile, we think that with the reopening of China, with them being the key market of demand for clothing and travel activity, once they resume the normal activity, that should also support the improvement in the textile market as well. For construction, we think that China will try to support the recovery of the market through stimulus package, so that should also improve on the construction project in China as well. So those are some of the fundamental in the market outlook that we think will help to support the overall demand, and that will help to absorb some of those new capacity in the petrochemical market that have been coming to the market for the past 2 to 3 years. So for the next section will be on the strategic direction recap of GC. The first page here, we just like to recap on the activity that which we look at right now. So the company has implemented what we call the 3-step strategy for the past 3 to 4 years, and we focus on the improvement of our efficiency, our ambition to grow more in the performance chemical, and also lastly on our contribution to the sustainability and decarbonization effort as well. So based on that, we have quite a strong strategy. And also if we look on our product portfolio, recently we just reshuffle our product portfolio so that we ensure that they are more focused on meeting the requirement of the mega trend in the long term going forward. So all these, we think that we are ready to capture the recovery in the global market going forward in the next 2 to 3 years. And along with that, we continue to try to progress along toward our long-term goal. On the right-hand side, which you can see is that we try to reshape our product toward the high value and low carbon business, and also to meet our net zero target, which we aim to meet by the year 2050 of net zero carbon emission. So this you can see more details on our portfolio evaluation to make our product more toward the high value and the low carbon business. These are the 3 key segments that we think we try to grow more in the future. The first one is the high value product, which we try to make our plastic resin product to be more value added application, which is what we call high value product. At the moment in our product portfolio, we have about 36% contribution from this segment, and we aim to grow that up to 56% by the year 2030. The second one is the bio and circularity product. So just like to point out that we have both the bioplastic product, PLA and PBS, which are produced by our JV company. And not only that, we also have the recycled plastic that we just started to operate last year through the company called Envigo that I mentioned. We think that we have the complete platform to meet the requirement for the sustainability solution. And at the end, we aim to increase the target to have the 1 million ton of bio-based product and another 75,000 ton of recycling product as well. And lastly is what we call high value business or HVB. This, as I mentioned, that is our main ambition to go up to 35% by the year 2030. And with the acquisition of Alnex that we completed, we have increased that contribution significantly up to 22%. And in the short term, the next 1 to 2 years, our focus will be on lifting up the synergy between ourselves and Alnex, and also try to support the growth of Alnex through the ambition to grow more in Asia and other high growth markets. So that will be the short-term focus that we look at. And so we don't expect any major new M&A activity or large transaction to occur in this short-term period. So this just to give more details on the Alnex acquisition that we made. So you can see that the past year has been challenging across all the market and also same for Alnex as well. But they still try to maintain all the cost saving program, the supply chain reoptimization, the operational improvement, all these to enhance their performance. So that's why overall they're still quite able to maintain resilience performance. If you compare to the conventional commodity chemical business, which will have a lot more impacted by the overall economic slowdown, but our next performance was only slightly below expectation. And going forward, we continue to support the synergy between ourselves and Alnex through several initiatives. One example being the collaboration of the innovation between ourselves and Alnex by establishing the innovation hub in Thailand, so we can collaborate on introducing new product application to the market. And bottom right, you can see the new project that Alnex is currently in progress, which is the construction of the new China hub, which will consolidate all the China production capacity into one single location. So that will help them to have the better operating efficiency, better economic of scale, and also be closer to the key customer in the cluster of chemical company as well. So that project will start to operate at the middle of this year. And last on this page to update on the project update that is already started recently or is expected to start this year. So on the left hand side, the first one is the project called Olefin 2 Modification Project. This one will be in line with our long-term strategy in that we try to enhance the feedstock flexibility of our olefin cracker. So our main feedstock will continue to be ethane from the Gulf of Thailand. But in the long term, we want to enhance our ability to use alternative type of feedstock. One option being propane. So in the global market, we foresee that there will be some opportunity to import propane at a competitive price. So that's why we upgrade our olefin plant to be able to use those propane as an opportunity for us. In terms of the feedstock for this year, maybe I just like to touch upon one issue for the company, which is on the feedstock ethane. As you may be aware that over the past 1 to 2 years, we experienced some of the shortage of the the lower intake of ethane that is available to us. This is mainly based on the changing of the concession from Chevron to PTT, which took place in the second quarter of last year. So that maybe resulted to some of the lower ethane output, less than normal. So for this year, we already expect that PTT will be able to ramp up the ethane output back to close to normal level, starting from the second half. And then by next year, the output should be back to the normal level. So that's why the outlook for us is that the ethane mix for this year should improve over last year. And then next year will be back to the normal level, which is around 60% of our feedstock input. The rest, you can see some of the new downstream capacity that will come forward this year and next year. So we have the HMC new polypropylene line that already started to operate last year. And in the first quarter of this year, we'll have the new super engineering plastic plant operated by the company called KCC. And next year, we will have the new PLA plant number 2, which is under our JV company, Nature Work, that they built a new PLA plant here in Thailand. So next will be the update on the market outlook.
Let's begin with the crude oil demand outlook. If you look at the graph, it describes the crude balance between the supply and demand. You can see that the demand will be over the supply in the rest of this year because because China reopenings that would help this support the demand growth. Moreover, the OPEC maintain the production cut at level amounting to 2 million barrels per day. And with the Russia-Ukraine conflict still maintained, that would affect the supply that will be lost around 0.7 million barrels per day. But we have to closely monitor because of the economic and inflation concern that may support the demand growth. And if you look at the bottom, you can see the global refined product demand that had developed over the years. For the fuel demand in the orange one and the diesel demand in the blue one, that has been developing more than the pre-COVID level. And for the jet demand, we can see that it has been increased from 2001, and with the traveling across the world, that would help the jet demand will be growth to the pre-COVID level. Next, I will describe the end-use market outlook. First is the automotive outlook. If you look at the graph on the bottom, on the above graph, you can see that in 2019, the EV vehicle sales was approximately 3%, but in 2023, the EV sale is approximately 15%. That is the growth. That EV car sale portion has been rise over the years. So we can see that the automotive vehicle sales will be growth in this year. Next is about the textile segment. The overall market is still challenged from the global recession concern. You can see from the graph below that in the year 2022, the average fabric sales is lower among the previous years. That was because the prolonged China zero COVID policies and the behavior of the consumer has been changed to the conservative spending. And we can see that the China, and we believe that the China reopening will help us support with more traveling and social activities that would help the demand will resume in the future, especially in the second half of this year. But in terms of the supplies, there is still some challenges from the new capacities, especially in China. For paraxylene, that will be around 7.5 million tons, and PTA that will be around 6.2 million tons. Okay, moving on to the next market segment. For the packaging and the film, we still see some downward trend of the packaging and the film. But if you look at the red line that represent the Asia consumer goods PMI, the consumption of the Asia region is still better compared with the rest of the world. This is because the China reopening drives the demand recovery, and with the growth in the food and beverage packaging, that would support this demand of the consumer products. But as I mentioned earlier, the demand might be challenging because of the economic recession and the inflation concerns. Last is about the construction and household pipe. If you look at the graph that represent the percentage products growth compared by quarterly from this year and last year, you can see that we can see the pickup in the product growth in the US, especially in India. This is because the construction has been growth from the substantial stimulus package, and moreover with the net zero emission policy that stipulate in various countries these days, this will help the rising in government investment in control of carbon, such as the smart city, smart home, and the wind turbine product. All right, let's move on to the last section of our business segment. Is about the Onyx, which produce the industrial coating resins. Last year is the challenge year for the industrial coating because of various factors that I've mentioned earlier, like the economic recession and the supply chain disruption by Russia-Ukraine conflict, and moreover with the and the inflation concern. That is the macro factor that affect the economy last year. But we do expect that in the second half of this year, starting with the third quarter, that would help the demand will pick up in the rest of this year. The table below describes the end market exposure in terms of the Onyx end market. First is auto and mobility. You can see that the green exposure, which represent the positive one. We can see the positive sign because of the US continues strength in automotive OEM and vehicle refinish. But in China, there is some concern about the terminated subsidies for EVs and tax cuts that would lead to the lower demand in the first quarter. Secondly is about the industrial goods. You can see that there is a red or pink one in the Asia Pacific. That's what because the Asia Pacific remained weak from last quarter due to the COVID spike that affect from the COVID reopening in the beginning of this year, and we will see that we will see some recovery at the end of the second quarter. And third is about the packaging end market. We see the stable exposure compared with last quarter. This was due to the packaging is the consumer still maintain their behavior of buying the packaging same as the last year. And last is about the construction and decoration. You can see the green or positive side of construction demand in Asia Pacific. This driven by the benefit of strong economic recovery in China as the pandemic reopening resulting to higher spending in China in this year. All right, let's pass to Khun Thanathorn to describe about the ESG implementation.
Thank you very much, Khun Sanjana. For the ESG part, please, next slide, please. For the ESG part, you can see at the right-hand side, ESG we commit to operating in accordance with the decarbonization roadmap to take part in resolving and mitigating the impact of climate change and to achieve the net zero target in 2050 through 3 pillars. The first is efficiency driving. This is enhancing process efficiency by reducing energy consumption and increasing the use of clean energy. For example, installing solar floating system and reducing waste. The next one is portfolio driving. This is transforming business portfolio over the long term into a high value and low carbon business, while still generating excellent returns for the company, and integrating the principles of circular economy to provide options to customers with three main product groups, such as bio-based products, product designs, and specialty and performance chemical. The last one is compensation driving. This is offsetting excess carbon using high efficiency carbon capture technology and nature-based solution. For example, carbon capture and storage or CCS technology or CCS hub model which collaborates with PTT Group. And the project is expected to commence its operations in 2029. And on the right-hand side, this is our decarbonization roadmap. We divide into three initiatives. From the current emission of approximately 10 million tons, we will reduce our emission by 20% by 2030 through efficiency improvement. We will further reduce another 25% by portfolio adjustment, and the remaining 55% will be coming from a compensation-driven approach, such as carbon capture and carbon credit purchase. And for the next page, we would like to update the overall decarbonization roadmap. The first is efficiency driving. By 2030, we aim to reduce carbon emission through efficiency enhancement by almost 800% tons per year. While our ongoing initiatives could have reduced 800,000 tons of carbon emission already. We are implementing additional initiatives to reduce emission by a further 720,000 tons annually. And we believe that we are already more than double our 2030 emission reduction goal, driven by technology improvement, clean energy and biogas, and synergy within the PTT Group. The next one is portfolio driven. We adjust our portfolio over the long term into a high value and low carbon business, while still generating excellent returns for the company. With all this investment and capex, we need to balance growth, EBITDA, and carbon emission. And by 2030, we aim to grow by 0.02 from investment, internal carbon pricing, and low carbon business growth, such as a new polylactic acid or PLA bioplastic plant, and ENVIGO, which is the recycling plant for PET and HDPE. And the last one is compensation driving. We also build our carbon credit inventory, and we have already increased carbon credit by 1.28, as mentioned by PTT Group CCS Hub and Port Station.
Thank you very much for joining our call today. If any additional questions, please feel free to contact our IR team as well. Thank you.
Okay, the sections has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you investors and corporates for joining the conference. We look forward to welcome you all again in the next quarter. Thank you very much and have a good day. ขอบคุณนะคะ